Everybody, my name is David Bush, and I get to be your host and moderator today on this exciting webinar titled 3 Steps to Fill Your Pipeline with Guaranteed Fannie Mae H.A.R.P loans. I'm excited to have a couple of distinguished panelists with me today from a variety of parts of the United States of America, so stay tuned. We're going to have some testimonials with some current clients that have done some Fannie Mae H.A.R.P loan marketing and have funded some transactions, and they're going to tell you about their stories with working with Overflow Works. And then we're also going to talk to Jeff Bush, the founder and president of Overflow Works, and he's going to give us his insider marketing tactics. And he's just going to walk you through the simple 3 steps that you can take to start leveraging this niche opportunity. The 3 steps that we're going to cover today is we're going to talk about how to identify qualified Fannie Mae owned mortgages in your area and beat the competition to them. We're going to talk about how to market to them using a high response marketing strategy and best practices that have been proven out over the last few months of those people that have been the early pioneers of H.A.R.P marketing. We're also going to talk a little bit more about qualifying, submitting, and funding the loans and just giving you an expectation if you're just brand new to the marketplace. Our key panelist today is Jeff Bush. He's the president of OverflowWorks.com. He's had 18 years of direct marketing experience, and get this, he's mailed over 1 billion pieces of direct mail. That's a lot of postage headed out for mortgage customers around the country. He actually owned a mortgage banking firm that closed over 5,000 loans from 2000 to 2007, and he leveraged direct mail as his primary lead generation tactic. And so he's got lots of experience, and he's been actually traveling around the country talking about this idea of H.A.R.P marketing because it is the newest and fastest growing niche in the mortgage industry. So Jeff, welcome to the call.
Thanks for having me, Dave. Appreciate it.
Well, give me a little background here on what your experience has been in direct mail and mortgage mail, and then just talk a little bit more about this unique opportunity with H.A.R.P 2.0.
Yeah, so a quick background. I've been selling direct mail advertising to mortgage companies and car dealers for like 17 years, so most of my working life has been in the direct mail business, and just kind of carved out a little niche with mortgage, and it's worked really well. So I've gotten, pretty good at it and tested, a few thousand different letters and mailing lists and postcards, letters, self-mailers. So, just have a long, history of doing direct mail for mortgage companies all around the country. I kind of stepped away from it for the last couple of years because the mortgage business was just so hurting. I mean, no equity, no product. So I kind of just stayed away from it for the last 2 years. But then 6 months ago, I heard about this whole H.A.R.P deal, and knew that it was going to be a hot niche, so we developed some mailing lists and some mail pieces targeted specifically to these Fannie Mae owned mortgages that are prospects for H.A.R.P, and went out pretty hard and fast when this thing came out 2-3 months ago. We were actually ahead of the game, and now we've got about 40 clients around the country doing marketing with us and kind of fine-tune this thing. So we're going to talk a little more about that.
Great. I'm going to throw up a poll here real quick. If everybody can just cast their votes on here, I want to get an idea of how familiar people are with the H.A.R.P 2.0 process. And if everybody can just go ahead and cast their vote, I'll close that poll in just a second. But Jeff, we're going to jump into the first step of this 3-step process, and maybe you can kind of lead us in with just the obstacle or challenge in helping individual mortgage production originators to go out there and identify who those Fannie Mae owned mortgages are beyond their own customer database and really capture the market and be the first to market this H.A.R.P 2.0 opportunity.
So yeah, the key to any successful direct marketing campaign and to have success in funding a lot of loans in your mortgage business from your direct marketing campaign is you got to have a real good list and a real good offer. I mean, those two things are 80% of the reason if your mail campaigns are going to succeed or fail. The actual mail piece you use, whether you do a postcard, a letter, whether it's red or blue or black, that really is only 20% of the success. List and offer are big. So you got to find people that Fannie Mae owns their mortgage, that you can mail this offer to. We can refinance your house even if you're upside down, if your loan's owned by Fannie Mae. So we just found a way to find the Fannie Mae owned mortgages, 100% guarantee it, because we're verifying, with Fannie Mae that this loan is owned by them. So, our standard criteria loan amounts 150 to 417. Those are the conforming loans that Fannie was buying. We typically like doing loan dates from 04 to 09. That meets the Fannie guidelines for submission. And then we have addresses and some phone numbers, some that we can, market to. And this is an actual sample of a list with names, addresses, lender name, LTV, loan amount, and loan dates that are real Fannie Mae owned mortgages sitting here in Alpine, California, which is San Diego County.
Well, Jeff, talk a little bit more about the value and the quality of the list, because I know that there's a lot of people that are on that just did the polling that said that they're not extremely familiar with HARP 2.0, but maybe they've been approached by their title rep, or they've been hearing that they can go grab title records or a title database. How does that compare with your data?
Well, here's our experience. When we go out and look at 10,000 mortgages that fit the loan date range and the conforming loan amounts that we pull, only 25% of them are owned by Fannie Mae. So if you go get a list from your title company of 10,000 mortgages, let's say, Bank of America, Countrywide, you pick out loan dates and cities and lender names, you're only going to have 25% accuracy. When you send your mailer out, 25% of the people can actually, get a HARP loan. So it's a big waste of your loan officer's time, your time, and a lot of your money, just mass marketing to a title list, okay? Best I've seen is some of the title companies, by targeting certain lender names, maybe they can get it up to 50% accuracy, but, our lists are 100% accurate because we're verifying the loans owned by Fannie Mae. That's the big difference in this data, and, why ours costs a little more, because you're going to market specifically to people that are guaranteed to be owned by Fannie,
I got some questions coming in from the audience. I appreciate those. And if you have a question, go ahead and submit that. We'll try to get to that during our call today. The first question, Jeff, is the guarantee. What does that mean that you're able to guarantee? I mean, is that money-back guarantee? I mean, how are you able to guarantee that the mortgage record is owned by Fannie Mae?
Well, like I said, we're verifying with Fannie Mae that they own that mortgage. So end of story. It's 100% guaranteed. If you get one phone call or one person that says that they're, not Fannie Mae owned, we'd refund you. So it's, it's accurate data, based on the day we looked it up, which is about a week before your mailer goes out. So it's real accurate,
It looks like that from the looks of this particular slide that counts for some different large counties, there's quite a bit of data out there, but you're also doing an exclusive on the data. So talk a little bit more about exclusivity and how that works, and how some of these early adapters to this HARP 2.0 marketing can kind of beat the competition to the market.
Well, we only have, like I said, maybe 40 or 50 clients now around the country, and you can see that they're buying 2,500 mailers typically. So, and you can see how much data is out there for Fannie Mae owned mortgages. I mean, these are just some random counts, I think alphabetical by state and county, that are some big numbers out there. Like Los Angeles, California, obviously has 225,000 mortgages there that fit the loan dates and the loan amounts that everyone's looking for, but there's only 56,000 that are Fannie Mae owned. So, and then only 5,400 with phone numbers. So it's a targeted database. As far as the exclusivity, whatever you buy, I'm not going to sell it to another mortgage company. If you buy, 2,500 names, it's your data. I'm not going to go sell it to someone else. Is the exclusivity. And as long as you keep ordering with us, every month or two, you'll have unending exclusivity on that data. So
we've got a couple quick questions about the Fannie owned a call. That is basically numbers that have been scrubbed against the do not call list, Jeff?
Yes, that are Fannie Mae owned. Great.
Next question is what about credit? Have you used some sort of a credit qualifier? How do you know that they haven't been foreclosed upon, or that there's some other reason why they don't qualify?
Well, if the home got foreclosed on, that's a public record, so they'd be taken off our database. So if they've already had a foreclosure, our lists update every week, depending on the county and how fast they report, to us. But the lists are pretty accurate. You're not going to have that many foreclosures on the list. You will have some people that call you that are later on their mortgage that you just can't help. We've got a couple clients on the phone that can tell you more on that. I'll tell you that if you're in a market area that's really upside down, like I know Michael's on the call and he's from Phoenix, Arizona. Phoenix got hit hard on values. So the more upside down a market is, the more mortgage late people are going to call you. But my experience is it's only 10%, maybe 20% of your calls will be late on the mortgage. So we refer those out to real estate agents to try to short sell their house since they don't qualify for a Fannie HARP refi. So we still get some benefit out of giving some realtors some leads. They go take a listing. Maybe you can do the purchase loan on that property. That would be my suggestion on what to do with the mortgage late leads, but it's only 10 to 20%. So you still have 80% to 90% of the leads to work, and that's where you're going to find your 5, 10, 20 deals, out of 50 calls, something like that.
Now, you've made this really easy for individuals that want to test this marketing. You've got a couple of different packages available. Just maybe walk them through the packages, and then we'll show them some of the sample mailers, and then we'll talk a little bit more about the actual case studies and interview our panelists today.
So we have 3 packages. Silver packages if you just want to buy the data. Some people, hey, my brother owns a mail house, so I want to do the printing and mailing, and I want to actually hold the envelopes and put them in the mailbox myself. So if you just want to buy data, you can buy the silver package. 2,500 records for $1,975. The gold package is what 90% of our clients are buying, and that's where we send out a mailer in a window envelope. So we design a letter for you, print it, insert it into an envelope, mail it. That's typically standard mail postage, so 4 to 8 days delivery time. That includes the data. We email you a copy of the data, so you own the data. If you want to go do a mailing, yourself a month later, you can do that, or you can come back and mail it again with me for pretty inexpensive once you buy the list, because out of the $3,675, $1,975 of that is the data, and the mailer's only $1,600, $1,700. So that's been real popular for us to design and mail the letters. So basically, you just pay me the money, and we mail the letters out for you. You get 25 to 75 incoming calls, depending on what market area you're in. The only difference in the Platinum package is instead of putting the letters into a window envelope, we have a team of stay-home moms with pretty good handwriting that actually hand address the envelopes. And then we put a 45-cent live real stamp on the envelope. So it mails first class. It looks real personal. It's truly hand addressed, not the pretend machine thing that we can do also. But so that's the difference in the price. It's another $1,500, something like that, to hand address the envelopes. A couple people that have done it that way have told me, Jeff, if I get one extra loan out of hand addressing the envelopes, it'll pay for the difference in the mailing. And I'm not getting one extra loan. I'm getting 3 or 4. So I like that option. We haven't had a lot of people take us up on it, but it'll make your mailer stand out from the rest if it's hand addressed. 99% open rate. Whereas a window envelope usually gets opened about 50 to 60% of the time. So all this response you get out of half the people opening it. But either package has worked well. So anyways.
And maybe the opportunity for maybe going after a higher loan amount may be a better fit for the hand-addressed envelope. Would you recommend something like that if anybody wanted to focus on more of the jumbo market?
Yeah, that's a good point. One thing I have seen is if my clients mail 150 to 417 loan amounts, my average response rate's been 2%. If you call me and say, hey, I only want to talk to the people with $300,000 loan amounts and higher, that cuts my response rate in half. I mean, it's still good, 1% response. You may get 25 calls on 2,500 mailers of $300,000 loan amounts, but, hand addressing the big loan amounts is absolutely a great idea, because you will get a better response, and they'll appreciate something hand addressed, and you'll get more calls on that.
Great. Well, let's talk a little bit more about step 2, and that's just delivering the marketing strategy that you've been able to prove out as being a high direct response type of letter and marketing tactic. So walk us through just some of the basics of the letter, and then we'll get into the response rates and just what the conversion opportunities are.
Yeah, so this is a real letter that we mailed to Connecticut. So we put on the top 7,000 Connecticut mortgage holders should qualify for the new HARP. We've got borrower's name. We've got his actual loan amount. Some mortgage guys are putting the lender that he's making his mortgage payments to, shown through the window envelope to get it open. That's a pretty aggressive way to market. You need to check with your state and make sure that that's okay compliance-wise. But we got a personal code on the mailer that references the database that you'd hold on to, so you can look up their name when they call and get all their information, lender name, loan amount, loan date. So basic letter, you can refinance to today's low rates, even if you're upside down in your home. Call me. I mean, it's a simple letter, but it's very effective. It's black and white. It's a lot of, sometimes less is more. I really do believe that in direct mail. So this is, we've got about 5 different letters that are all different, but this has been one of our more successful ones, and very simple, showing a low rate.
Well, let's talk a little bit more about response rate, Jeff. I mean, what can somebody expect in the form of a response rate, and what's going to really dictate that based on where they are geographically?
2,500 mailers, we have not had less than 1% response on the 40 or 50 jobs we've mailed. So you're going to get 25 calls, almost guaranteed. I mean, we haven't done one less than that. I think, Michael, who's on the phone with us, is going to talk about this, but he might have the record right now because he's out in Phoenix, Arizona. The harder the area is hit, I mean, he might have received 75 phone calls, a 3% response. I know he was over 2%, over 50, and I haven't talked to him in a few weeks. I'm sure more calls have poured in. So 3% response is probably my record right now. So I just tell people, depending on the market area you're in, you're going to get 1 to 3% response, and depending on the loan amount size you mail. You start taking your loan amounts up, your response rate's going to go down. Bigger loan amounts don't respond to direct mail as much as smaller loan amounts. They're more savvy, and they just don't respond as well. So that's 25 to 75 calls on 2,500 mailers, and then what are you going to convert out of that? Let's ask the clients on the phone. I mean, hopefully you can convert 10%. Some guys are telling me they're converting 20 to 30% because there's no income, or there's no LTV qualification and no real FICO score qualification. They're a little less lenient on income. So I don't know. We'll talk to some people and find out, 10 to 30% close.
Let's bring in Michael, and since you brought his name up first, let's go ahead and just bring Michael in. Now, Michael, you're out in the Phoenix market. Talk to us a little bit more about, just give us kind of a quick background on your experience in the mortgage industry, just so people have an understanding of your background, and if you're a broker or banker, and then tell us a little bit more about how you've leveraged this marketing campaign.
Well, I work for a broker. I've been in the business since 2001, January of 2001. The response that I've gotten off this has been phenomenal. Well over 50 calls. I have 12 loans in process now. I'm working on another, I'd say 12 to 15 that are in various stages. Some I've already sent out disclosures to. They just haven't emailed them back or faxed them back yet. And they've all been Fannie Mae loans, so that guarantee certainly stands. I haven't got anyone that has called me on a non-Fannie loan, that's for sure.
Yeah, what are some of the borrowers looking like in terms of loan amounts and credit scores? I mean, understanding that they're all Fannie Mae owned, but what's the quality of the incoming call?
Well, I had loan amounts of over $200,000 is what I requested. I didn't want to go down as low as the 150, and almost everyone has had 720 or better FICO scores, and I would say the vast majority are probably 770, 780 FICO scores. Here in Phoenix, they're anywhere from 180 to 300% LTV and CLTV. I got docs on my first deal on HARP yesterday. They signed, no problem, and I should have docs on probably another 3 or 4 over the next week.
What kind of rates are these people paying, Michael? Hey, Michael, what kind of rates are you seeing that these people are paying? They've had these mortgages for a few years, right, prior to 09, so are they coming in at 5.5, 6, 6.5? I mean, what are just kind of all over the board, I imagine.
Yeah, the majority are 5.5 or higher. I've had quite a few at 6.25, 6.5. One I think was even over 7.
Right.
I think I had 3 that were at 4.875, so really couldn't do too much for them, considering the lenders have their own adjustments, and so the rates for them are 4.25, 4.5. At 4.875, it didn't make a whole lot of sense for them. But I've had a lot of people that wanted to go to a 20-year fixed, and there were even a few that have gone to a 20-year fixed that were under the 125, and I was able to get 3.99% on a 20-year fix. So, some of these people are going from their 30 down to a 25 or 20, and still
HARP
save
really
300,
likes that
$400,
too, right? The whole HARP program is all about lowering their terms. So if you're doing that, you might get a little bit better approval ratio on your DUs, right? When you're taking the term down.
As a matter of fact, yeah, I've had a couple that I either got a refer with caution or one of the levels on a 30-year. Once I switched it to a 25 or even a 20, I was able to get either a better level or even an approve eligible.
Well, that's a hot tip right there. I didn't even realize that, yeah, changing the term. I kind of forgot about that until we just started talking about it. Lowering the term could get you a DU approval instead of the EA1 or 2, right? That's interesting. And,
yeah, talk a little bit more about the timeline on how long you think this HARP thing is going to last. I mean, are you seeing much competition in the market? Are your clients rate shopping you at all, or saying that somebody else is calling them, or what are you seeing out there?
I have only seen a couple that were rate shopping, and I don't have a problem with that because they typically go to their credit union or their bank. Their bank can't touch me. I'm giving people better rates than the banks.
Michael, you got a lot of people in Phoenix that are upside down. You had a few calls, you said, from people that had just hit like NOD or they had a bunch of mortgage lates and you couldn't help them. Were you able to find, like, you just kind of refer those off to your realtor partners to try to short sell the house? Or what do you do with those calls? You just kind of tell them, sorry, they don't qualify and they go away? Or what do you think?
Well, you know, I've had a couple that tried to work on loan modifications with their bank because the bank told them that they had to go late. And these are people that can still pay for their mortgage and actually got their mortgages caught up. And so I had to tell some of them, I'm sorry, I can't do anything right now. You know, I'll talk to you in a year.
Right.
And then I've had a couple of others that are struggling to make ends meet, and I got to refer with caution, and I did give them a realtor's number so that they could, you know, talk to a real estate agent about selling their property. I have a couple that are still unsure of whether they want to sell the house. You know, it's the husband said, I'm going to sell before we go late, and the wife, I don't want to sell. So there's family squabbles over what they're going to do with the property at that point in time. But, you know, I let them know, hey, listen, you want to sell your home? You know, especially there's a couple that even had equity in their home. I said, you know, take that equity, put it down on a new home. I'll do your new home loan.
That's great.
Nice.
Well, thanks for sharing that with us, Michael. I'd like to bring in David. David's out in Massachusetts, just near the Rhode Island border. Is that David?
Yeah, I'm here, yep.
Great. Well, talk to us what it's like out there on the East Coast, because we just heard from Michael on the West Coast. Talk to us a little bit more about what's happening out in your market.
You know, it doesn't sound like everybody's upside, you know, as much. I'm running into average LTVs. Everybody, I mean, most of my clients are still upside down, but most of them are between 105 to 120, 125. I do have a couple that are in the pipeline in the 140 LTV range. But I did about, I did 2,000 letters, and I really concentrated in my local county. And the call response was pretty overwhelming. It's just myself. I really don't have a team or anybody helping me with the calls, but I probably fielded anywhere from 50 to 60 calls. I'm closing my first one on Friday, and I have about 8 in the pipeline, 8 solid ones. They're all approved eligible. The one thing I really liked about it was the fact that it was so local. A few of the clients that I got in my office were people I know.
That's great.
It's great. You know, my kid's t-ball coach walked in my office, a couple of people I went to high school with. So it really, you know, set myself apart from the competition, the fact that I was really local. I even had a client that was so local, he walked to my office with his docs. So it's the response ratio was great, and I'm having similar experiences as Michael. You said Michael, right?
Right.
Most of my clients are all, you know, FICOs of 7, 720, 750. I do have a couple that, you know, that went through with a 620. I'm a mortgage broker, so I'm able to wholesale with a lot of lenders, GMAC, for example. I have an EA3, and GMAC will take it because it's their own paper. And that one's a real they're all actually real profitable. I think out of the 8 loans, I'm probably looking to generate about $40,000 in revenue combined between just the 8 units. And I'm getting ready to send out another couple of thousand. I'm at the point now where everything is submitted. I got more than half of them approved. I got 2 of them clear to close. I was really impressed with the response ratio, and every single call that I checked, every single one was owned by Fannie Mae. There wasn't one that came back that was not owned by Fannie Mae. So when he tells you, he guarantees you that they're all scrubbed against the Fannie Mae list, he's 100% accurate with that information. I'm so glad.
Are you doing any stuff with David? I'm sorry to interrupt you, but are you doing anything with Freddie Mac? I mean, is there anything? Have you experienced that at all? Because I've heard there's been some frustrations, and it's been a lot harder to get Freddie deals done.
I got I got my second Freddie Mac deal in the pipeline, and it is frustrating to do the Freddie Mac deals. They're not as friendly with giving you property inspection waivers. I got a Freddie Mac deal right now, 780 FICO, 50K reserves, 29 DTI. For some reason, it won't accept the file. It will accept the file at a 20-year term. When I reduce the term, it'll accept it. And that's the only option the client has. And they're taking it, so it's a working loan that I have. But I have a couple of other ones that I just I just can't get through the system. I mean, from what I understand, though, Freddie Mac is updating their system over the next week or so. So if you have any Freddie Mac deals, rerun them in a week and a half or so. I'm told that there's going to be a lot more flexibility in the results.
Hey, I want to say something real quick, guys. Somebody told me the other day that they were running some Freddie, what is it, LP or DOs or whatever they call them, and if their credit card balances were over 50% utilized on their balance, that was messing up their approvals. So they were paying some credit cards down under 50% of their balance, and all of a sudden they were getting approvals. I didn't think credit card debt and balances ratios compared to limits would have anything to do with a Freddie Mac deal approved, but they said that it did. That was the only difference. And something else I heard from one of my clients the other day, I just want to throw out there to everybody, is that I guess Quicken Loans is doing wholesale, right? And Quicken Loans will write a loan term, not 30, 25, or 20, but odd numbers. Like you can write a loan term at 17 years, 23 years, 29 years. I mean, they're kind of an interesting, a lot of people don't want to start over on their 30-year amortized mortgage. So if they've got 24 years left, Quicken will write a 24-year mortgage, which I thought was kind of interesting. In fact, Dave, who told me that was the other client that bought the mailer in Rhode Island, Michelle. She was the one who told me that. I just remember.
Yeah, we work with Quicken. We do a ton of those with Quicken.
I mean, I'm not promoting Quicken. I don't know how they are at all on a wholesale basis, but I like the thought of rewriting the mortgages to an odd term. And, gosh, this is just big news that you could lower the loan term and get a totally different approval out of DU and LP. I forgot about that. I need to share that with my other clients that are, they got 50 deals on their desk and trying to make sense of them all. And, to get a few more loans funded, that's a big deal. So I appreciate you sharing that and reminding me.
Thanks to David and thanks to Michael for sharing your experience with us. I mean, these individuals are not paid to come on this presentation. They've just been happy customers, and we just invited them to share their experience because we want to be able to take away the risks from the people that are considering this option to be able to take advantage of this HARP 2.0 marketing campaign that Jeff developed. Jeff, talk to him a little bit more. I've got a poll up here, and if anybody would like more information, please go ahead and cast your vote now, and then I'll go ahead and have Jeff. Why don't you just wrap up and tell everybody on the webinar what their next steps need to be if they want to move forward with marketing to some of these guaranteed HARP loan candidates.
Well, early bird gets the worm on this deal. I mean, I really appreciate Michael and David stepping up and buying this campaign from me like 2 months ago when I had no references. I had nothing to tell these guys except, hey, I got a hot list. and a great letter, and I know it's going to work. So they both stepped up and paid me, you know, without having anybody to call. So I really appreciate that. You know, the guys that go first just get a lot of the, you know, the best response and get all the low-hanging fruit. So, you know, I guess in finishing, Dave, I would just say to have them, you know, call us. We can run counts, tell them exactly how many Fannie Mae owned mortgages are in every zip code and a radius around them, you know, by county, by state. So we'll show them the counts. We'll show them 2 or 3 letters if they like this letter, if it's worked well, or if they want to do something different, they want to put their picture on it, you know, we can do all that on the letters. And let's get something printed and mailed and, you know, get you 25 to 50 phone calls and another, you know, 10 deals for next month, you know. That's my suggestion. So.
If anybody has any further questions, you can give us a call at 888-212-4343, or you can just visit us on the web at overflowworks.com. Thanks, Jeff. Thanks, Michael. And thanks, David, for participating today. And we wish you all the very best of success. Take care, everybody.
Thanks. Take care. Have a good day, guys.
Thanks.